Ladies, we have a problem. We don't talk about money enough. And why is that a problem? Well, because guys are talking about money. And that means that guys know better how to negotiate their salaries, how to get in there, how to ask for more money. When we don't talk about money, not only do we not clearly communicate with each other that our work matters and has value, we also are just ill-equipped to make excellent financial decisions because we're not learning from one another. Today on the show, we are going to be talking about why women need to talk more about money. First up, I will be chatting with Kathleen Entwistle. She is a senior vice president in a major banking operation, and she's one of very few women to have risen to this prestigious status. After that, I'm going to be sharing some of my biggest mistakes that I have made throughout my time as an entrepreneur. So let's get to the show. Welcome to the Lindsey Elmore Show, a podcast that helps you find fulfillment amidst chaos. On this show, I interview thought leaders, doctors, creatives, spiritual gurus, and game changers who inspire you to pursue your dreams, overcome obstacles, and leave your mark. When it comes to finances, it is women who will take the biggest financial hit from the current coronavirus pandemic. Schools are closed, and even working moms are likely to have to take on additional responsibilities to care for their children and their children's education, as well as caring for elderly and at-risk family members. This is not great because women at baseline are already at risk for income inequality. Baseline job offers for women tend to be up to 7% less than their male counterparts. And women make an average of only 79 cents on the dollar to men. And that's if you're Caucasian. Black and Latino women face even greater disparities in income. And the pay gap is only the beginning of the problem that women face in finance. Women are less likely to receive loans and have higher rates of student loan debt. Female workers who take maternity leave report being more unable to pay their bills and are more likely to take on additional debt to pay for newborn care. Women suffer from mental health disorders such as anxiety and panic attacks and suffer from sleepless nights due to financial stress. It's ironic because men are more likely than women to take days off from work to deal with the pressures of financial stress, even though they are more financially secure and report being more financially satisfied at baseline. All of this means that the future of savings is an uphill battle. Nearly 70% of women feel that they do not have enough money saved for retirement versus up to 50% in men. Women are less likely to understand how a 401k works and why they need them. All of this even though women report being more likely to save their money than to spend money than their male counterparts. As Susie Orman said on stage in Brooklyn in a moment that changed my life, women think that we want to know our finances, but really, we don't. Kathleen Entwistle helps women founders and C-suite executives make good decisions about their money. She is a financial advisor at a world-renowned financial services firm and manages over $450 million in client assets. She has been educating women on money, investing, and their financial future for more than 25 years. She is a frequent panelist and speaker, and Kathy has appeared numerous times on CNBC, Fox Business, Bloomberg, Yahoo Finance, and Cheddar, sharing financial insights and ways to navigate the markets. Kathy has been featured in Goop, Worth, Coveteur, and Gotham magazine. When not helping empower women in their finances, Kathy enjoys golfing, tennis, and entertaining family and friends. She serves on the Ridgewood Public Library Foundation and the Executive Leadership Board of the American Heart Association and Women United in Philanthropy. Kathy and her husband, Tim, have 3 children, and I am so excited to welcome Kathy to the Lindsey Elmore Show.
Thanks, Lindsay. I'm really excited to be here too.
Well, thank you so much for coming, because I think that we have a major problem. Women don't talk about money. Women get shy. We think it's not our place to talk about these things. We just go, I don't know. Should I not? How do you open the discussion with a woman who is not ready to talk about finances? What are your favorite questions to ask clients? And why should women be talking more about money?
Yeah, these are all great questions. And I think the biggest issue with women and their money and not really wanting to know, it's the fear of the unknown that drives us there. So the more that we know, the more comfortable we're going to become with our money and the better decisions we'll make. And I always do say money is power. And when you give your money away, you're giving away your power. So what I'm trying to do is help women understand their money and keep their power and make decisions that are best for them. My favorite questions to ask are things like, what is important to you about money? So if you think about that, that's not, hey, Lindsay, how much money do you have? No, it's more like, it's behind the scenes. It's sort of like the emotional attachment to money or the emotional fear of money comes out with that question. So a lot of times when I ask that question, the women sitting across the table from me will say, security, being able to go to sleep at night, knowing I have enough money to live on for the rest of my life, being able to take care of my family. It's all around that fear of not having enough. And again, it goes back to understanding what you have and being able to move forward with it. It's interesting when we talk about women versus men and understanding their money. I find that when it comes to personal finance, men don't necessarily understand it much better than women, but they want to appear more confident and they will put themselves out there and say, well, that makes good sense, or yes, I understand that. And women want to understand it perfectly before they acknowledge that they understand it. So I think it goes back to that, perfection. We want progress, not perfection. I started my career many years ago just volunteering to teach women about investing. And what I learned from them is they're intimidated by sitting in a room with men about money and discussing it. So I offered a class just for women, and I still teach that class today. And what's interesting is they just want to understand certain terms and basic concepts and just get that foundation built. And I think that when we start with a foundation and we speak in a language we all understand, and we're not talking over anyone's heads with big fancy words, we're just really just discussing money in real terms, people understand it better. And once you understand, you get that, relief, and you're ready to embrace it a little bit more.
So, when we begin to have open and frank discussions about money, what are some of just the basic terms that men and women don't really understand that you think are critical to financial success long term?
Sure. And, I think a lot of times when people think about money, they think about investing, but I say you've got to start at the basics way before investing. So call it like your balance sheet. What is your balance sheet? And a balance sheet is nothing more than looking at all your sources of income, whether it's your salary or if it's dividends and interest from investments, or if you're receiving Social Security or some sort of a pension. That's all sources of income. And you add all of those up on the top of the page. And then on the bottom of the page, you put your expenses. And there's 2 different types of expenses. There's fixed and there's variable. And they're exactly what they mean. Fixed is a recurring expense that you have every month. So that might be a mortgage or a car payment, but it's the exact same amount every month. And you add up all of your fixed expenses. Usually there's not much you can do with those in the short term. You can work on reducing them in the long term if you need to. And the variable expenses, those can fluctuate, and that could be anywhere from your food or grocery or entertainment or gifts. And those are areas that maybe you can work on a little bit more to see if there's wiggle room to take some of the funds that are going towards the everyday and putting them towards long term. So the first thing is an income statement.
Okay, so you have to know what you're making and you have to know what you're spending. It sounds really
Right.
simple, but when you really dig down into it, you don't realize how many sources of income you have, and you don't necessarily realize how many things you have going out the door and how much you're wasting on debt and all of those things. So how how do people know that maybe they need a financial advisor? Where does that even spark? Like if somebody is graduating college and they go, I basically have, $450 on average in my checking account. Is this a time that I need a financial advisor, or do I need to be making $50, $60, $70,000 a year before I broach this topic?
I think that's also a really great question because a lot of people think they need a lot of money before they get advice. But, you know, if you're going through an exercise program and you want to lose 20 pounds, you don't wait till you lose 20 pounds to hire the exercise coach, right? You start in the beginning. So I think that you can start wherever you are. Getting a financial plan, you can pay a fixed cost for a financial plan and just help somebody have somebody help you, I should say, get you from where you are now and help you put together a roadmap to where you want to be. And a lot of times I'll use analogies and I'll say, like, look, you're not going to, if you want to plan a vacation, you don't just show up in an airport and look around and say, I wonder which flight is, which airplane is going out today. And I wonder when I get to my destination if there'll be a hotel there for me. We don't do that. We plan that out. And it's the same way. You can plan out your goals on a financial plan. It's just a roadmap and it can change. But if you have an idea of what you have and you have an idea of where you want to go, we can help work with, clients to help them position their goals with their resources in order to be successful. So even a young college student who's just coming out and doesn't even have an income yet, it's probably the best time to learn because the younger you are, you have the advantage of time. And when you have time, you have the time value of money. And you also have something called compound interest, which just means when you make money, you continue to make not money just on your original money, but in addition on the money that you're growing and making on top of that. So it's a multiplier. That's a great way to grow your financial assets for your future. So I do think they should start young.
I remember when I was a pharmacy resident, and pharmacists make great salaries because we're doctorate level trained people. We've
Mm-hmm.
got a specialty skill set. But when you're a pharmacy resident, you're making not a lot. You're making somewhere between $35,000 and $45,000 a year, and you're looking forward to the day that you're making those six-figure salaries. And I remember one of my colleagues said she was on the phone with her father, who is a financial advisor, and she was like setting up a Roth IRA. And I was like, girl, how do you have any money to do into this? She's like, I'm just putting $50 a month into it. I'm just putting the minimum contribution that I can. But this is how I hear that long-term wealth is made. And I also think that for me, one of the biggest things that set me up for success financially was getting out of student debt as absolutely quickly as I could. And I did it just by lining up all of my debts from least to most and just chunking at them one at a time, one at a time, one at a time. And so, what are some first steps that someone who is naive, who doesn't know where to start, who's perhaps scared, is even scared of the prospect of going and like interviewing a financial advisor? What can women look for in financial advisors to know that they've got someone who's good, someone who is not going to take a huge chunk of their earnings, which is a major problem? And how do women start on a path to becoming more financially savvy?
Right. Well, I do think one of the best ways to find a good financial advisor is to talk to, friends, colleagues, like you said, your roommate her dad was helping her, sharing ideas. I really am very vested in helping women understand their money. And one of the things that I think we need to do more of is talk with each other, not just about our health, but also what are we doing to put money away for our future? What kind of salary do we have? what are we making? We shouldn't be afraid to have those conversations, because that's going to help us advance against, the 79 cents on the dollar versus dollar for dollar and things like that. And it's a trust, right? It's like you say you had a gut that you should have done something differently early on when you were maybe a founder, and you have to go a little bit with your gut, a little bit with sort of some knowledge base that you would have, and also a little bit with maybe some good advice from other people. So I know when I meet with clients, they'll come to me through friends, through clients, through different organizations that I've spoken at. And I think you get an idea of what that person is like first, and whether or not they are going to value you, they're going to value what you need them to do, and they're able to add insights and information and guidance to you to help you get to where you are. The women that I used to teach early on, and still to this day, the biggest issue they had was that nobody was taking them seriously, and they were also being spoken to almost like over their heads, so that they felt insecure. And I don't like the word dumb, but they felt dumb about their money, and they're not dumb about their money. They're making decisions about money every day that they don't even realize they're making, that are good decisions. And so we want to bring that out, and you want to find somebody who's going to help you understand where you are, understand what's important to you, and then give you a plan to help you get to where you want to be in a way that feels comfortable, doable. And what you said earlier, dollar cost averaging is a great way to start. It's setting good habits. Mm-hmm. And the more you set good habits, the more likely you will be to achieve what you want to do.
So if women do feel intimidated, how do you encourage a woman to take that first step? I mean, we all say, like, put on your big girl pants and just do it. But in the world of finance, I think it is true that we get positioned as, oh, you're just a girl. And that's not the case. We are powerful women. But how do you, if someone is saying, if you're talking to a young woman and she says, I'm just out of college, I'm not ready to even look at this yet, I'm not ready for it, how do you encourage just that first step?
I usually like to do a little bit of a storytelling or an analogy to give an example to bring it, back to them so it feels real. Like, I once had this client who didn't pay attention to their student debt, and then it kept growing and growing. And by the time, so what are the issues of the pain points first? Tell me what your pain points are. I'm really nervous. I have this college debt. I don't know what to do with it. Like what you did, I advise that all the time. Pay those debts off, add extra principal, don't just pay the interest. And we have a conversation about paying just interest, what that looks like on college debt, on credit cards, on all sorts of things. And if I could promise you an 8% return every year, like you pay with student loans, or an 18% every year, like you pay on your credit cards, you would be all in. So why are you paying somebody else that amount of money? Let's see how we can eliminate that. So we're going to hit that pain point. We're going to talk about, it's really hard to think about when you're 21 or 22 years old, that one day you're going to retire and you're going to need a retirement fund. However, we'll talk about paying yourself first. So it never shows up in your bank account. It goes to your 401k or your Roth IRA first, right? So we explain why that happens. And I'll use another analogy about putting money away early or putting away money later, and what that dollar amount is at the end of the day. And the person who puts the money away early has a lot more because of time value of money and compound interest. So those are the two, usually for college young people, those are the two things. Start your retirement fund early and start paying off your debt as well. And then, your liquidity or your safety fund next as well.
So you mentioned something a moment ago about how financial health is health in general. And right now in the midst, we are recording on May the 6th. So many people are coming to the very beginning of the initial end of this pandemic, and we don't know what we're facing. And people have been out of work for a long time. And so How do you think that financial health impacts our overall health?
I think it's a huge impact. It's a huge negative impact. When you don't know what your finances are, or if you're worried about money, it's just going to be stressful and it's going to add stress to you. And you can say better than I what all those, all those outcomes are when you have added stress to your body, to your, physical body, to your emotional, mind, and so forth. It can be very taxing. So by understanding it, and what we have done with our clients over the last 5+ years is, particularly after the financial crisis of 2008, is we like to look at your money in three different ways. The first two being the most important. One is your liquidity. We want everyone to have 6 to 12 months of liquid assets available to them in both their personal life, and if they're a founder, in their business too. And with what just happened with the pandemic and COVID, you saw all of the business owners needing cash quickly and maybe not being able to access it as quickly as they'd like. So having that liquidity is key. And you want that money in short term, whether it's cash or CDs or treasuries or things like that. Those are the type of investments that would be liquid. Then the next one is your longevity. We know, and this is the issue with women don't like to take the risk with their money in investing because they don't understand it. But yet we know that men invest and they do much better because they can overcome inflation and they can grow their money. So we want to help women understand that this money can be more long term. And even though markets can go up and down and there's lots of volatility and fluctuation, and it happens every year, we have little blips in the market. But if you know you have your money that you need safe on the sidelines in your liquidity area, then you're not going to panic or get stressed as much as you would with your, longevity money. So that's helped our, client base a lot. And I try to share that with everybody I can so that they don't have that issue of stress when it comes to their money. That's a key thing. And the last area is legacy, which could be philanthropy or to your children or, to others, but that's a different one. I think the two most important ones are liquidity and longevity.
I have to admit something about myself. Liquidity, I'm pretty good. I've got 8-10 months of personal funds in the bank. Liquidity for my business, I'm not as good, but I've still got at least a couple months of operating expenses in the bank. Longevity, okay, I've got some 401ks, I've got some IRAs, I've got some longer term investments. I cannot tell you, for weeks sitting over there is my will and trust,
Right.
and it's just sitting there, and I don't know why. It's like dog-eared, and I've spoken to the attorneys and I've spoken to the financial planners, and they're like, you've got to do this, because what is going to happen if you die tomorrow and nobody in your family, no one who loves you and cares about you knows, what do you want done with your money? What happens to your business? What happens to, because if you've got a business like mine where even if I died tomorrow, I would still continue to bring in income for a while. Where do I want that to go? And why does it seem so darn scary to just like put the pen to paper and sign it? But I think that we're all in a moment right now. We're facing the future, and facing our own mortality
Yeah.
is a great thing to do, because if you don't plan for what to happen with your money, I can only imagine what big banks and big government and all the other entities will say that I should do with my money. And the worst thing, I think, for me not signing those documents is any arguments that I might leave behind for my family to have to sort out on their own.
Absolutely.
And that's not a good place to be. And so that brings up another issue. When I read your brief of what you wanted to talk about on the show, you said something really surprising to me. You said that you think that kindness is the foundation of what you do, and that the best way that women can support women in our financial goals is to have kindness. So why is kindness so key for you in empowering women to take ownership of their own finances, as well as getting people to talk about finances more?
Yeah, I think that's also a good question. I'm just such a strong believer in the power of kindness. I know for me personally, when I come from that place of trying to understand where someone else is and bring my best way to them without judgment, without anything, but just a pure, like, sounds corny, but like a pure heart to be able to like make a positive impact for them. And to me, that's what I do every day. And that's what gives me the biggest reward, is making a positive impact on others. And in a topic where everybody feels so uncomfortable and so insecure and so, uninformed, to be able to share that kindness with them as they go through that exercise of trying to open up and understand their financial picture and see that there's somebody on the other side of the table that's there to support them with it. I think that makes a huge difference. And I always say you never want to learn the worst, no one wants to learn about their money, but when they have to learn about their money is in a crisis situation, right? So a lot of times I would have people come to me, somebody, their spouse died, or they were going through a divorce, or something, awful was happening to them. And when you're in a crisis situation, your brain is already like frozen. You can't really think straight as it is. So imagine trying to understand a topic that you really weren't comfortable with in the first place. So just by helping people through this conversation and doing it with kindness, I think we just sort of lift each other up and empower each other. And really, at the end of the day, the best thing for me is to see somebody get it, understand it, and feel really good about it.
I agree with you because, as we mentioned already, stress distorts our ability to make great decisions. And if we wait until we're completely stressed out and we're in a crazy situation, and you've helped a lot of women move past divorces and still end up financially stable on the other side. Let's say a woman didn't plan well, and now I laughed when people said, we're going to have this explosion of corona babies. And I was like, you're going to have an explosion of corona divorces, is what you're going to have. So let's say a woman didn't plan well. Perhaps she only had a month's worth of reserve in the bank. She doesn't know when her next job is actually going to come out. She's maybe a hairdresser or a nail technician and has just been out of work. Maybe the unemployment checks haven't been coming. She's got a couple kids who are young. She's having to homeschool them. What does she do? What would she do if now, on top of all of that, she's facing a divorce?
Yeah, I mean, it's a tough question. I would say the most important thing is to get as much information about what your rights are going through a divorce. Um, yeah, it breaks my heart when something like that happens, especially for somebody who is in a position of weakness and not in the position of strength. I would also say to rely on as many resources as possible. So if you're not working and you don't have any money coming in and you don't know what you're going to do, that's the time where you start negotiating. You have to start negotiating your payments, whether it's credit card payments or rent payments or utility bills, or it might be you might need to ask for help. That's really a really hard thing to do, but you might need to ask for help when it comes to things like if the school is charging for extracurricular activities or for books or for things like that. You might need to go to them and say, I can't afford this right now. Is there a way, is there some sort of resource or way to help pay for this? If it's really bad, I mean, truly, if you only have 1 month of income coming in and you don't know where your next dollar is coming from, you might need to go to the local food bank and start asking for that as well. Don't be afraid to ask your friends, ask the public resources. And you can also get some information online. You can read books. You can get as much information as possible to arm you for next steps. And I would say you need somebody really who's going to be your advocate. It could be a friend, a family member, and they can help you navigate this and bring on the right resources and professionals to help you as well.
So correct me if I'm wrong, but you stayed home with your children for 12 years.
Did, yes.
That is something that not a lot of women are able to do and then come back to and be in a high-powered position like you are. You are among one of very few women holding either director or VP level or executive level positions in financial institutions. How did you navigate those waters?
I'm so glad you asked that because, I really didn't realize that it was something that is a powerful story until the last couple of years where a number of other women said, that's a great story. It's really inspiring and you need to share that more. So I would say, as a stay-at-home mom, there was a lot of women staying home when I was staying home. So the working moms there were less percentage there, as today there's a lot more working moms. And I give them so much just kudos, because my goodness, it's so hard to do everything and to do it all well. I tried to go back to work. I really couldn't figure it out. And I decided to stay home because it was just easier for me. But what was interesting when I went back to work, and this is what I want, like any woman out there who's thinking about going back to work or changing a career or has been out of the workforce for 1 year, 10 years, or just lost their job, just think of it like this. I went in with my shoulders slumped down. I thought, who is going to want to hire me? 12 years, like what do I have to offer? And I went into the interview and the person asked me also, oh, you have an MBA in finance? I'm like, oh, yes, I finished that while I was at home with my kids. Oh, yeah, that's great. Oh, you got your licenses to do this business, your Series 7 and your insurance license? I said, yes, I found someone to sponsor me and I did it on the side. And, oh, you live, in a community and you've been teaching classes. So at the end of the interview, they said, we've never done this, but, you're hired. I had to take like a drug test and that was it. And they're like, you're hired. And I thought, I walked in like feeling so insecure about myself. And I walked out and I said, you know what? Life experience, the way we're volunteering in the community, the boards that we sit on, the children that we're raising, the schools that, we're interacting with, all of those experiences have value. And you as an individual have so much to bring to the table. And you just need to, tell your story and find that confidence and walk in it. And that's really what I did. My goal was never to be a superpower financial advisor, female in a male-dominated world. My goal was to help women understand their financial picture like I understood it and give them that sense of empowerment and sense of almost like freedom and independence so they could make decisions for themselves and not have to rely on anyone else to make decisions for them. And so doing it that way, I built a business and it grew. And I wasn't expecting to get where I am. And I'm really happy to be here more as someone who can help others and hopefully be a mentor. And really that's it.
Oh, it really is an inspiring story. And I'm so glad that other women have been inspiring you to tell it more, because I think the way that you felt with those shoulders slumped forward is how a ton of women feel when you get fired, when somebody gives you that bad feedback, when you've been a mom and you go, who am I to start my own business or to make these financial decisions? And so thank you for sharing. Before you go, Kathy, are you ready for some lightning round questions?
Sure.
Okay, so these are just quick questions. And so I am curious, what is your number one strength?
Compassion.
What is the thing that you struggle with the most?
Technology.
If you could give a piece of advice to your younger self, what would it be?
Believe in yourself. You're going to do great.
What keeps you up at night?
Probably the unknown of right now, where we are right now with the coronavirus, not knowing what that means going forward and trying to figure out how to best live within this new environment.
Who has been your greatest inspiration?
My dad.
Yeah, you want to tell us a little about that?
Sure. He had 3 daughters. He told us that we could do anything that we believed, we could do anything we believed we could do. And when I was going off to college, I had no idea what I wanted to do. as a major. And he said, be a finance major, because if you can understand your money, you can do anything. You can take that and go into any business you want to. And I stayed in the finance world, but it was still very helpful.
Yeah, I love
He was a
that.
big wind behind, big supporter.
Yeah, I agree. Because I mean, for me, I went into science because my mom was a nurse and was like, you've got to have a real job. I wanted to be an actress and a theater major. And so I just figured out a way in life to make science performance. And you did too. You just found a way to make finance compassion, and that's beautiful. And I love that. Last but not least, God to you is
Life.
yeah. Well, Kathy Entwistle, it has been an honor to speak with you today on the Lindsey Elmore Show. If people want to find out more about you or the services that you offer, is there somewhere they can reach out to you?
Yes, they can call my office line or my cell, 201-414-7031. They can find me on Instagram, Kathy Entwistle, and they can email me at kathleen.entwistle@ubs.com.
And just to make sure everyone knows how to spell your last name, it is Entwistle. So, Kathy, thank you so much. I really appreciate your time. This was an enlightening discussion.
I really enjoyed it. Thanks, Lindsey. Take care.
Do you have big dreams but are unsure how to put them into action? Brand Strategies Lab is the place to turn your ideas into the nuts and bolts that you need to create, revitalize, or expand your brand. It is an online business training course that helps you decide who you are, what you sell, and who will buy it. It is hosted on a brand new social media platform called Channels. If you love Marco Polo, video chatting with your friends, or Snapchat, then you will absolutely love Channels. I created Brand Strategies Lab following more than 10 years of business coaching, mentorship, reading, and personal growth. Find out more and be the first to access this new training at www.lindseyelmore.com/BSL. That's www.lindseyelmore.com/BSL. Being an entrepreneur is not always easy. We make mistakes, and sometimes we make mistakes that we don't even know that we're making. And I know that I am not immune from making really big mistakes. I don't know if you've ever heard the Fiona Apple song, I'm quite a fan of a well-made mistake. That is me, because really and truly, if you're not making mistakes, then you're not trying hard enough. But when it comes to being an entrepreneur, sometimes you make really costly mistakes, and mistakes that are like really tough punches in the gut kind of lessons. And so in this segment, I wanted to share with you some of my biggest mistakes, some of the biggest challenges that I have faced, and some of the things that I go, oof, I really wish I had done that differently. The first mistake that I have made is hiring people too quickly. I will say it, I am not the best boss at onboarding. I want people to show up and just kind of get it. And unfortunately, my business is so broad, it's really hard just to step in and get it. I've had employees tell me that it took them a year before they really understood how to navigate all of the customer service issues that come in. I have people that come in that just don't understand how I talk to my audience, how I share things with them, how they can help to support and embody that voice and write excellent copy. And so when I hire people too quickly, it's a time burden on me that is an incredibly frustrating time burden. That is really challenging, and that is not something that I want to duplicate. So after a year of going through 3 social media managers, like boom in a row, I decided, with the advice of my business manager, I said, you know what? We just need to take a break. We just need to take a break. I need to actually work this job and understand again how I can better convey the vision and the mission of the job, because it's setting someone up for failure if you hire them and then don't effectively train them, and then you get mad that they aren't doing what you want them to do. I had to take a step back as a boss and say, I need a month of me working this job day in and day out so that I can more effectively convey how I want the job done. The other thing that's happened with me hiring people too quickly is not realizing that when you hire an employee in a state that's not a state that you live in, you gotta set up tax structures and business entities in that state. It also changes not only your payroll tax, but also your sales tax processing. It changes a lot about the structure and function of your business. I've also learned that when you either fire or someone quits who lives in another state, it's really hard to actually convey that to the state sometimes, because they want to continue collecting all of that sales tax and all of those payroll taxes and all of that funding that, if I had a business entity in their state, was totally reasonable. But now that I don't, it's like pulling teeth how many times you call and send messages saying, I closed my business. This is my final one. This was when it was paid. So that's been a learning lesson. I have also learned that having an amazing accountant makes my life so much easier. I didn't know when I first started this that there were like online payroll softwares that would help me to better manage all of the things across these state lines. And so getting an accountant that really understood how to integrate all of my finances and really make it easier for me to process payrolls on time, to be sure that I'm registered correctly, was a game changer for me. And it really helped me to overcome the consequences of the mistake of hiring people too quickly. If hiring people too quickly is a sin, firing people too slowly is a sin that is of epically bigger proportions. I have made this mistake in working with some agencies. One in particular, I knew before I ever hired them that it was not going to be a good fit. I knew it was not going to be a good fit. And yet I ignored my gut and I decided to stick with them, and I forgave them for every bad mistake they made and never effectively advocated for myself that this is not the direction that I want to go. And so firing people too quickly has a lot of consequences. Number one, you throw good money after bad, is the way they say it in poker. So when you're playing cards and you make a bet that you then realize was a mistake, but then you just keep throwing money at the problem, that's called throwing good money after bad. And that is what you're doing when you are not firing people quickly enough, when you know that it's not working out. On a more personal level, when you have people who you go, oh, this is just not working for me anymore, it causes you to have significant frustration that can come out, at least for me, this big type 8 challenging personality, at least for me, my frustrations can come out in anger. And the last thing that I want in someone who is working for me, who, even though I'm frustrated, I don't want anybody to ever be treated unkindly because of my actions. I'm very cautious of that. I show up, I mean business, but I don't ever want anybody to feel like that I devalue them or dehumanize them as a person. That is unacceptable behavior. I can coach, I can mentor, but if I don't clearly say, you're not meeting your job function, that's not fair to that other person. And it also isn't fair to me because I'm having to like house all of those negative emotions, which are not doing me any good either. The next thing I've already mentioned a little bit is just not following my gut. Not following my gut has led me to just keep people around too long, to bring the wrong people on, to make decisions that expand too quickly, make decisions that make the business and the company grow too quickly. When you first start a business, you need a minimum viable product. What is the minimum thing that you can do to get everything out there without overextending your finances? I made a huge financial mistake. Last year, I was dissatisfied with my email service provider, and I decided against my better judgment to go with another service provider. And I did it in part, at least, if I'm really clearly honest with myself, and that I think is what this show is all about, is looking ourselves in the mirror. If I'm really, truly honest with myself, this company courted me. They courted me, and they gave me field passes to go see the Yankees. I got to meet some of the Yankees players. It was a really, really fun experience. And I remember talking to my business manager about I just don't know. This is a really hefty investment. This is really I'm not sure that we need this in this moment. But I feel so bad. I've made these relationships with these people. We've been talking to them for over a month. And she told me, you can't be bought. You can't be bought. And for whatever reason, I got the gumption. I sent the email saying, this is not the right decision for me. Thank you, but no thank you. And they came back just that one more time and were like, this is going to be something that's going to scale with your business. You're going to be able to grow and utilize it over time. This is going to be the most amazing solution that you've ever experienced. Well, fast forward about 4 weeks, and we still are unable, between me, my marketing manager, as well as my copywriter, all three of us were like, we do not understand how to send an email. Why is this so complicated? Even our web developer told us this is the most needlessly complicated software he had ever seen. Now, that's 4 of us, all of us intelligent people, all of us with years of experience in our respective areas of web development, marketing, content creation, and copywriting. And all of us were like, this isn't a working solution for us. And to just pour salt in the wound, when I went to the account executives and I said, guys, I am super dissatisfied. I hate your software. I hate it. It's not going to work for us. We're not going to make it work. We only have about a week's worth of training left, and we have set up none of our marketing campaigns. We have not effectively tied this to the website. I can't. I want out. And they refused to even refund a single dime and said, you signed a contract with us and that's the way it is. Well, I knew right then and there that I had made a grave error by not following my gut, because that kind of person is the last kind of person that I want to do business with. When you engage with my company, I want every person who listens to this podcast, who joins Brand Strategy Labs, who does the Clean Slate Cleanse, who engages on YO Ed Club, whatever it is, I want every penny that people spend with me to feel like they are getting the most amazing return on investment that they've ever had. I want people to have so much value that it becomes a no-brainer. If I say, hey guys, I'm launching something new, it's a new program, I want every single person who's bought anything from me in the past to go, I trust Lindsey that whatever she is about to do is going to be so highly valuable. And so I didn't follow my gut. I felt like I got bought, and I ended up making a super costly error that really and truly, everything happens for a reason. And I look back on it and I go, okay, we did learn this one thing from them that really helped us to refine our processes. So I was grateful for that. But then it also reminded me of the mission and the vision and the ethics of the kind of entrepreneur that I want to be. And so that you have to count as a win. Last but not least, another mistake that I have made is not asking the right questions. So I made some grave errors when it came to the publication of the second edition of Essentials. I was wanting to use a third party to do warehousing, to do shipping, to do fulfillment, all those things. So we found a company that sounded just so amazing. The rates looked good, the terms looked good, everything that they were offering, we were like, wow, this is going to really solve our problem. But I didn't know that I had to ask, how are you going to ship these books? Because books, as well as media of all sorts, has special shipping terms. It is less expensive to ship a book than it is to, say, an article of clothing because of something called media mail. Media mail helps book publishers to ship books at lower costs. And so this fulfillment company, did not use media mail. Instead, they went with the astronomically more expensive solution, which was to ship non-media mail. So instead of it costing $4 or so to ship a book, it would cost 12 or 13. Well, all that cost, we didn't figure in on the terms of sale on our website. We weren't charging people that $12 or $13 markup. So all of that was a complete and total hit to the bottom line profitability of the book. And it's all because I didn't ask the right questions. It's all because I didn't ask the right questions. So looking back on the years that I have spent running an education company, I've definitely learned that hiring people too quickly, firing people too slowly, ignoring my gut instincts, and not thoroughly asking in-depth questions before I start to do business with people are some of the biggest mistakes that I have made, and definitely have been some tough lessons for this entrepreneur. The Lindsey Elmore Show is written and produced by me, Lindsey Elmore. Show segments are produced by Sue Procco and Kelsey Lorman. Production design, sound design, and editing is by Jive Media. If you have a question about this or any other episode of the podcast, send us an email to hello@lindseyelmoreshow.com. And hey, since you're still here, take a moment to subscribe, rate, and review this podcast. And while you're at it, go over and follow us on Instagram @Lindsey Elmore Show. This helps us bring the pod to more people.